Okay, so for chapter 12 and chapter 14, I know that on the textbook, there are a lot of details, right? And some of the details might be a little bit difficult for you to understand. So to make everything easier, I just wish that you can focus on my lecture and my slides. And in terms of the multiple choice questions that will be covered in the final exam, they will just come from what I covered during class, okay? So you may see that, the textbook may cover a lot of detail, but during class, I will just focus on the most important things. Okay, so just use my slides and lecture as a guide for the rest of the 2 chapters that we're talking about. Okay, so for chapter 12, we're talking about emerging technologies, especially blockchain and AI. So why are we learning these? This is because, so far we have learned about some basics of accounting information system, right? We learned that, we can use a relational database to capture the business process and collect relevant information about that business process. And then we can store that information on a relational database and then use some simple SQL queries to process the information, right? However, the relational database is just one of the databases, types of databases in the world. And now blockchain is a very hot topic nowadays, which is another type of database that we should learn about because more and more corporations are considering adopting some sort of blockchain. And as an accountant and auditor, it's important to see how that will affect our accounting auditing work. And then speaking of processing information, now with the availability of big data, right? For example, for a company, they might be interested in what customer comments do they put on social media. And so let's say for Apple, right, they might be interested in seeing the customer comments on like different platforms and see if customers are satisfied with the product. So now companies are having, different types of data available for them to extract business relevant information. So now we have to think about ways to deal with that kind of information, because the traditional relational database or using SQL is no longer sufficient for businesses to process those kind of information, right? So we need more sophisticated tools. And then that's why we are also talking about artificial intelligence. Okay, so that's the background and why we are talking about these. So first, I will talk about this technology or database called the blockchain. So how many of you have already heard about blockchain or learned about blockchain? Okay, so not many, right? So I assume that, we start from scratch. So for blockchain, it's related to the concept of Bitcoin, right? I believe most of you have heard about Bitcoin, right? Bitcoin or cryptocurrencies, especially now with the scandal of FTX, right? We heard a great, a lot of information about this field. So then how does blockchain relate to these cryptocurrencies? So in short, blockchain is just the underlying technology or the underlying database that support those cryptocurrencies, including Bitcoin. So now let's first define what is a blockchain. So blockchain is nothing, so fancy, but blockchain is basically, you can consider it as a database. So compared to the relational database that we learned throughout this class, blockchain is just a different form of database. Then what's special about blockchain? What kind of form does a blockchain have? So blockchain is having this distributed feature. or we call it a distributed ledger. And this kind of database is contains information that is like organized by time sequence or by chronological order. So I will explain these two features one by one, and then tell you why these features make blockchain so unique that every company or most of the companies are talking about using blockchain. Okay, so the first feature of blockchain is being distributed. So what does it mean to be distributed? So to interpret this concept, you first have to understand what is a peer-to-peer network. So a peer-to-peer network is just a network where any two individuals can interact with each other. So you can think of this class as a network, right? And each one of us is a node or, just an individual. So peer-to-peer just means any one of us can talk to each other and transact with each other. So this is called, peer-to-peer. Now, distributed just means that each of us on this network has the same copy of the database. So for example, I have a copy of, say, all the assignments that I assigned to you, right? And you have the same copy via Canvas, right? So this is one way to think of distributed. Every one of us has the same copy of the information. That's called distributed. So this is easy to understand, right? But why this is special and why this makes blockchain, unique? This is because by being distributed, it enables blockchain to capture any discrepancies between the ledgers or the documents of two different individuals. For example, say if we use the assignment as an example of a document, right? So let's say Regina changes some information, let's say her grade of assignment, right? She changes, let's say from 8 to 10, I'm just making this up. So her record will be modified on her end, right? However, I have the same copy of the assignment grade and you have the same copy. So then all these different copies will raise an alert because now our information, because on our end, it says Regina got, let's say 8 points, right, for this assignment. But on her end, it says Regina got 10 points. So that discrepancy will immediately raise alerts that detects this kind of data manipulation and prevent it from happening. So this is the nature of being distributed to prevent the data manipulation or tampering. So this is the first feature of blockchain being distributed, and this feature can, enable blockchain to capture any data discrepancies from manipulation, either due to fraud or due to error. Okay, are we good here? All right. So later we'll compare a relational database with a blockchain. Okay, and then you will see, why blockchain is being so popular. The second feature of a blockchain is that it organizes information in like a chronological order. So first, let me explain what does this mean. So for example, in this our class, we have a network, right? And then say I transact with Harry, say I send him a bunch of Bitcoins, and all these transactions or records will be collected on, say, a placeholder. You can think of this placeholder as a document or, any virtual space that store that information. And in a blockchain world, we just call it a block. We save all these transactions in a block. So once the transactions are stored in a block, someone in this classroom is going to validate all these transactions. For example, Irina will come out and say, hey, let me validate the transaction between Abby and Harry. So I will check if Abby has enough balance in her account and if Harry is in the right position to receive the Bitcoin. So she and any one of you can do this validation. So if all the transactions are validated, these transactions will be closed by having a hash. You can think of a hash as a seal, right? It means that you close these transactions. And then that forms a block, or that seals the transaction, or that finalizes the transaction. And this kind of, collecting transaction, validating the transaction, closing the transaction happen iteratively, and that will form other blocks, okay? And then these blocks will be interlinked with each other by hash referencing. So that is to say, when we generate the second block, after it, the second block will cite or refer to the previous block by using the previous block's hash. And therefore, all these blocks will be interlinked with each other. So this is a very nice feature, especially in the business world, because, for example, let's say I am Apple, right? And I have to import some of the, let's say, parts to put together an iPhone. So, for example, some of the chips are from Taiwan or China. And then if some of the chips have problems, then technically we can trace back the origin of that chip, because all the blocks, if you think of all these transactions can be interlinked, then you can trace back where the problem originates. So that's why this interlinked database is very attractive to business use cases regarding supply chain, where you have to trace back the origin of certain thing. For example, I remember a few years ago, Walmart has some problems with their lettuce, right? They detected some very bad bacteria on their lettuce, but they don't know where the contamination came from. That kind of inspired Walmart to, adopt blockchain to save all that supply chain relevant information on a blockchain, because then they can see where did the contamination happen, then to take actions about it. But this is, something additional about, the being interlinked, being an interlinked database. But this interlinkage also creates this benefit of tamper-proof, and let me show you why. So when we come up with this hash or the seal, the value of this hash, so you can think of a hash as a series of numbers or digits. So usually the value of the hash depends on the content or the data or the transaction that's in the block. So if anything changes in the block, then the hash of that block will be changed too. So that is to say, if anyone wants to manipulate information in one of the blocks, the hash or the seal of that block will be changed too. So that will cause a break in the blockchain, because the reference will be broken, the link will be broken. And therefore, if that's broken, something went wrong, right? And then you can detect it to prevent the manipulation from happening. So by being distributed and by being chronological, using these hash referencing, these two features enable blockchain to be so-called immutable or tamper-proof, because once the information is recorded on a blockchain, then it's very unlikely that the information will be changed. And I want to mention that the way how these blocks are interlinked actually gives this kind of database the name blockchain, right? Because it's a bunch of blocks and they form a chain, right? So this is how this kind of database gets the name. But now I think after breaking it down for you, you will see that actually it's just a type of database where, in each block, you can store any kind of information. So for Bitcoin, actually in the blocks, these are just transactions using Bitcoin, and that's it. Okay, so this is a bit blockchain in a nutshell. So any questions here? Okay, so I actually have a video to show you or to recap what I just said. I think this one is more vivid than my interpretation.
Blockchains are incredibly popular nowadays. What is a blockchain? How do they work? What problems do they solve? And how can they be used? Like the name indicates, a blockchain is a chain of blocks that contains information. This technique was originally described in 1991 by a group of researchers and was originally intended to timestamp digital documents so that it's not possible to backdate them or to tamper with them, almost like a notary. However, it went by mostly unused until it was adapted by Satoshi Nakamoto in 2009 to create the digital cryptocurrency Bitcoin. Now, a blockchain is a distributed ledger that is completely open to anyone. They have an interesting property. Once some data has been recorded inside a blockchain, it becomes very difficult to change it. So how does that work? Well, let's take a closer look at a block. Each block contains some data, the hash of the block, and the hash of the previous block. The data that is stored inside a block depends on the type of blockchain. The Bitcoin blockchain, for example, stores the details about a transaction in here, such as the sender, receiver, and the amount of coins. A block also has a hash. You can compare a hash to a fingerprint. It identifies a block and all of its contents, and it's always unique, just as a fingerprint. Once a block is created, its hash is being calculated. Changing something inside the block will cause the hash to change. So in other words, hashes are very useful when you want to detect changes to blocks. If the fingerprint of a block changes, it no longer is the same block. The third element inside each block is the hash of the previous block. And this effectively creates a chain of blocks, and it's this technique that makes the blockchain so secure. Let's take an example. Here we have a chain of 3 blocks. As you can see, each block has a hash and the hash of the previous block. So block number 3 points to block number 2, and number 2 points to number 1. Now the first block is a bit special. It cannot point to previous blocks because, well, it's the first one. We call this block the genesis block. Now let's say that you tamper with the second block. This causes the hash of the block to change as well. In turn, that will make block 3 and all following blocks invalid because they no longer store a valid hash of the previous block. So changing a single block will make all following blocks invalid. But using hashes is not enough to prevent tampering. Computers these days are very fast and can calculate hundreds of thousands of hashes per second. You can effectively tamper with a block and recalculate all the hashes of other blocks to make your blockchain valid again. So to mitigate this, blockchains have something that is called proof of work. It's a mechanism that slows down the creation of new blocks. In Bitcoin's case, it takes about 10 minutes to calculate the required proof of work and add a new block to the chain. This mechanism makes it very hard to tamper with the blocks because if you tamper with one block, you'll need to recalculate the proof of work for all the following blocks. So the security of a blockchain comes from its creative use of hashing and the proof of work mechanism. But there is one more way that blockchains secure themselves, and that is by being distributed. Instead of using a central entity to manage the chain, blockchains use a peer-to-peer network and everyone is allowed to join. When someone joins this network, he gets a full copy of the blockchain. The node can use this to verify that everything is still in order. Now, let's see what happens when someone creates a new block. That block is sent to everyone on the network. Each node then verifies the block to make sure that it hasn't been tampered with. And if everything checks out, each node adds this block to their own blockchain. All the nodes in this network create consensus. They agree about what blocks are valid and which aren't. Blocks that are tampered with will be rejected by other nodes in the network. So to successfully tamper with a blockchain, you'll need to tamper with all the blocks on the chain, redo the proof of work for each block, and take control of more than 50% of the peer-to-peer network. Only then will your tampered block become accepted by everyone else. So this is almost impossible to do. Blockchains are also constantly evolving. One of the most recent developments.
Okay, so I think this video used nice pictures to repeat what I just said, right? But to summarize, in distributed and using this interlinked format and this concept of proof of work, which I'll introduce later, that blockchain has this feature of being tamper-proof. Or once the information is recorded on this chain, it's very difficult to change the information. Okay, so now you can think about why does it, matter and why companies love this feature, right? You can think about it and then we can discuss that later. But here I want to mention more about how does a blockchain work, especially how does a Bitcoin blockchain work. So usually, let's say we are in this peer-to-peer network, right? And each one of us can act as a node. So for example, if I send a Bitcoin to Valentina, and that new transaction will then, so this transaction is still pending. Okay, it needs to be validated to be finalized. So once we have that transaction, this transaction will be broadcasted to each one of you as a node in the network. And then each one of you will say, okay, let me validate this transaction. So that leads us to this third step. So each one of you competes to validate this transaction. So this validation process is also, okay, so you can think of a validation process at a high level as something simple as checking the balance of my wallet, right? Because you have to see if I have enough balance to send money to someone, or if Valentina is the right person to be a recipient of the transaction. So this is like a conceptual level. You can think of validation as that. But at the mathematical level, there is a lot going on in this validation process. For Bitcoin, the validation takes on a purely mathematical form called a proof of work. So a proof of work, you can think of it as a puzzle where the computer has to find a magic number that can give you some outcome. And the only way to find that magic number is to try each and every combination of a series of numbers. So this process will take a lot of energy, especially electricity. So this is why often in the news you hear people saying like mining a Bitcoin consumes a lot of energy. And by the way, this process of validation, this proof of work, like to find the magic number that works, this process is referred to as mining, right? Because it takes a lot of effort to solve this puzzle. So this is some relevant terms nowadays, right? Relevant to Bitcoin. So say all of us competes to solve this puzzle or to validate the transaction. And say Drew is lucky enough that he's using a very powerful computer and somehow he found the magic number. And he said, well, I validate the transaction. And he's the first one. So then he has to broadcast this information to the rest of us and say, hey guys, I validate the transaction, everything seems okay. So would you like to validate my work and accept this transaction that Abby sent the Bitcoin to Valentina? So then all of us will take a look at his work and also further just to check if everything makes sense at a high level. Okay, but there are a lot of mathematical things happening underneath. And suppose more than half of us agrees with Drew's work, then the whole network will say, well, there is a consensus being reached, right? Because there's more than 50% agreement, then the whole network will accept this transaction. And then my Bitcoin will be sent to Valentina. So this is at a high level how a blockchain work. All right. So I don't know if you heard about mining, right? Like Bitcoin mining. So this is where the mining comes from. And this is why the mining can be very like energy consuming. So that's why a lot of the Bitcoin miners, they have to move their servers to China, where the electricity is cheap. And they have to stay very close to like huge mountains where they can utilize the electricity generated from like waterfalls, something like that. So that's why these things are happening. Okay, any questions here? Okay, so here I just want to repeat that, the main characteristic of a blockchain is being immutable or irreversible or tamper-proof once the data is in the blockchain. So why is that important in accounting, and why does that matter to the business world? So basically, it's very charming to accountants or to corporations in general, is that suppose there is an effective blockchain, then you can pretty much make sure that the information on the blockchain is accurate because no one can manipulate it, right? So if you say this is the revenue amount from this blockchain, then pretty much that's it, right? Because you can consider I will talk about that later, but the fact that once the data is in the blockchain can be tamper-proof is very valuable in the business world, right? So this is one main reason this is very popular nowadays, but there are more reasons which I will talk about. So since blockchain is a type of database, right, that just takes on a different form, we should compare that to the relational database that we learned about. So when we say blockchain is distributed, right, in a way that each individual on this network has a copy of the same database. In contrast, in a relational database world, the database is considered centralized. It's not distributed at all because, for example, when we talk about, let's say, an ERP system, which is a type of accounting information system of Apple. Apple owns that ERP system, or Apple owns that relational database. No one else can, touch that database with proper control. But in contrast, for a blockchain, especially, let's say, a Bitcoin blockchain, which is public to everyone, then everyone can participate on this network without any restriction or permission. Okay, so that's one difference. And a relevant difference is that for blockchain, so when we say that, blockchain is operate on a peer-to-peer network, so in this world, you do not need a third party or a middleman to approve transaction or to validate transaction. Because as you saw earlier, every transaction is voted based on the consensus of the nodes or the network, right? So there is no authority managing this whole thing and say, hey, you guys should listen to me. And I think this is a legitimate transaction, then this should go through. So there's nothing like that, right? So in a blockchain, it's completely democratic, if you want to put it, but there's no middleman needed. But in a relational database world, there is a middleman. For example, managers. Let's say for the transactions, one simple example is that, let's say for transactions that are above certain threshold, say any transaction above $1,000 has to be approved by some manager, right? So in that case, the manager is the authority to approve the transaction rather than based on voting of all the nodes or all the individuals on the network. And the third difference is that there is only one copy of the relational database, which is the copy of the firm, for example, Apple. However, for a blockchain, anyone on this chain has a copy of the same database. So that's the third difference. And I'll talk about the third difference in a minute. And also for blockchain, we said that it has the feature of being tamper-proof, right? But for a relational database, it is easy or relatively easy to change information, because from the relational database that we learned so far, you see that we can, for example, change the name of the employee from Alice to Bob, right? Just to use a line of command, and then you can do it. But for blockchain, you cannot change anything. You can only add information to it, but you cannot change the existing information. So those are the differences between a relational database and the blockchain. Both databases have pros and cons. So later we'll see some applications of blockchain. We can discuss whether some applications make sense. But to further illustrate this relational database versus a blockchain, so here is an example. So say the first picture here illustrates a centralized database. So here it's not a relational database, but you can think of it as some sort of centralized information. For example, say this is a ledger of the balances for each individual, and Alice has a balance of $30. Bob has a balance of $100, and now Bob sends Alice $20. Okay, so now we have to reflect this information on this ledger. So when you have a centralized database where you only have one copy, then the only information that's changed is, you debit Alice $20 and credit Bob $20, right? That's the only change you have to make. But if we are on a blockchain system where different nodes have the same copy of the information, then if Bob sends Alice $20, then this information has to be first validated by all the nodes on this chain. For example, let's just say, different nodes here, they are by location, but let's say these are, different individuals with the same copy of the information. And let's say Alice and Bob happen to be two of the nodes. So then when this transaction is about to happen, they have to check, okay, yes, Alice, I confirm that I received $20 from Bob. And Bob says, yes, I confirm that I sent $20 to Alice. And other nodes can say, well, yes, we observed this happen. Okay, so based on some sort of consensus, and then this information will be validated and therefore be updated across all the ledgers or all the databases of these firm of different individuals. So that is to say, with a blockchain where a consensus is needed, actually the information is already reconciled between different institutions. So from an accounting perspective, this is also very valuable, because in accounting and auditing, we talk a lot about reconciliation of the information, right? So for example, in the previous class, when we discussed the case of that company receiving, checks from the customers, right? And then the manager has to deposit the money to a bank, and then the bank has to send like an update or confirmation saying that, oh, this is the amount that you deposited today. And then we talk about this process of matching that information sent from the bank to the record from the manager, to like some check preparer, right? And to see if the information matches. So currently, this is still a separate procedure done by accountants and auditors. But if you imagine that in this blockchain world, if bank is one of the nodes on the blockchain, and if the company is one of the nodes on the blockchain, then the information will be automatically shared between two parties and reconciled between two parties in real time, right? So then you don't have to reconcile later. So from an accounting perspective, having this kind of consensus mechanism is another way to, improve the quality of the data that flows across institutions. So this is another reason companies are enthusiastic about this kind of database or application. So let's talk about the types of blockchain that are available out there. So far, I think I talked mostly about the Bitcoin blockchain, the type of blockchain that's publicly available to anyone in the world. So we call it a public blockchain because you do not need any permission to get onto this network. Any one of you can join a Bitcoin network right now, in this classroom using your computer. So there's no permission at all. So this is the origin of blockchain usage. Okay. However, there are some challenges regarding this kind of public blockchain. So one challenge is that, so for example, if we have a publicly available, database that's available to everyone, even if we can do transactions anonymously. So for example, I can have a pseudonym called Abby loves to teach AIS, something like that, some fake name, right? Like you use your Instagram name, something like that. But people can still figure out who you are, right? Based on your transaction history, the transaction amount. So being anonymous doesn't mean you can protect your privacy. Okay, so that's one challenge of having a public blockchain, because companies, they do not want to put their information on a public blockchain, even with a pseudonym or being anonymous, because they still worry about, leakage of critical business information to the public. That's one thing. The second thing is that having a public blockchain, like depending on the validation mechanism, sometimes it's very inefficient to validate all these transactions. So for example, in the video, it shows that it takes on average 10 minutes to validate all these transactions. So this is also, to some extent, not as fast as real time. So this is another challenge of having a public blockchain. So now people come up with different types of blockchain to better fit the corporate applications. So one type of non-public blockchain is called a private blockchain. So private blockchain is interesting, and we can talk about that soon. So the private blockchain says, well, if we do not want to, make this chain available to the public, how about just available to us? So for example, say Rutgers can have its own blockchain where only Rutgers students and faculty members can participate, right? So this is a private blockchain, because there's, or some people call it an enterprise blockchain, where there's only one institution involved. So this kind of private blockchain is very debateful, because on the one hand, we talk about blockchain being distributed, right? So here, if Rutgers is the only institution involved, then what's the distribution attribute there? And so this kind of blockchain gets some criticism from there. So some people say, if you are having a private blockchain, why don't you just use a relational database? So this is some issues with the private blockchain. But for here, you just have to understand that a private blockchain only involves one institution or one enterprise. And then the next kind of blockchain is called a consortium blockchain, where on the chain, you do not have just one enterprise, but a few enterprises. For example, Rutgers, NYU, Columbia, Fordham, these schools in this area, New Jersey, New York area, can form a blockchain just for themselves. So here you have, several organizations, not just one. So this kind of blockchain is called consortium. So in the business world, this is the most common type of application. So say in the earlier example I gave about Apple and its supplier, this kind of structure belongs to a consortium blockchain, because in this blockchain, you have Apple, right, as the focal company. And then every major supplier of Apple can be other nodes on this network. And say, they if Apple orders some chips from one of the supplier, and then the same information can be reflected on different copies on this network, right? And so this is the type of blockchain that's most commonly applied in the business world nowadays. So these are, different types of blockchain. So we talk about, blockchain being very, has the feature of being tamper-proof. So that is to say, some good applications of blockchain involve information that you really want to protect from like being manipulated. So now we've seen discussions around or some prototypes around putting asset ownership information on a blockchain, because the theory is that if I own a house, right, I do not want that information to be tampered with. And also when I sell this house and then there is an ownership transfer, this information should also be have high integrity. So asset ownership is one of the good applications that people talk about nowadays, and also medical records. We want to have an accurate record of our medical history. So we also see discussions around putting medical records on blockchain. And supply chain records, I think this is already happening with Walmart tracing the products along, the supply chain. And some important accounting data, for example, say asset value, revenue value, anything that you want to protect from being tampered with. So the next concept that's very closely relevant to a blockchain is called a smart contract. Smart contract is basically some, apps. You can consider that as applications or apps that you can put on a blockchain. So because, blockchain is just a kind of database, right? Or you can think of smart contracts as SQL queries, okay? That way is easier to understand. So smart contract is equivalent to SQL queries, where you can, program those, you can do some programming to achieve some functions. For example, summarizing the total revenue, summarizing the total cost of goods sold, so on and so forth. Or you can also, do some interesting things with smart contracts. So for example, let's say some old guy foresees that he's going to pass away soon, so he has to write a will. And then in the will, he says, well, I plan to transfer this house, give this house to my grandson, only if my grandson graduates from Rutgers Business School with straight A's, right? Okay, so this is his will. But he has no way to, enforce this will other than, having maybe a third party, some trustee to, to enforce this, right? So the trustee has to make sure that, his grandson graduates from Rutgers with straight A's, and then let's give the grandson the house. But smart contract can, automate this. For example, if we put asset ownership data on a blockchain and then put an application programmed by smart contract on it, then when the grandson graduates from Rutgers, right, and then he can just like send a scanned PDF of his diploma to this, chain, and also send his transcript to the chain. So after everything is validated, then the ownership of the house will just be automatically transferred to the grandson. But if the grandson does not have all the credentials, then the transfer cannot happen. Okay, so this is just some interesting applications of smart contract if, things are happening in the direction that we foresee. So here I want to talk about how blockchain will impact the audit and assurance profession. So we said that, we discussed earlier that one of the reasons that blockchain is catches attention of accountants is that it has this nature of getting accurate information or self-validated information, right? So this feature is very attractive to auditors and accountants. And assuming a very efficient blockchain where the information can be validated in real time, then we say that it can achieve some continuous or in real time assurance of the information. Because usually, for example, if you want to do bank reconciliation, the most you can do is at a daily level, right? Every day you check your bank account and reconcile the information. However, if everything is happening on blockchain, then that verification or reconciliation can happen at real time. But at the same time, there is challenges for our current accountants and auditors because the blockchain is such a new phenomenon that, and also most of the business school students in accounting major, they are not trained in the technical way, right? For example, here we only talk about blockchain at a high level. However, sometimes it's challenging to understand, how the businesses are adopting blockchain and how does it really affect accounting. So that means that's an opportunity for you guys as new accountants or new auditors, that if you can invest some time to learn more about this technology, it will make you highly demanded in this field, because now this is such a new phenomenon that not many people know what to do with it. So if you can be an expert in this area, that will put you in a very good place in the coming years. Here, I want to emphasize that even though we say blockchain can, make sure the integrity of the data, once the data is entered into the system, I have to emphasize that a blockchain is not a gospel truth. It cannot solve everything. It cannot prevent every fraud. Fraud can still happen, but off-chain, mostly off-chain. So here we're talking about on-chain versus off-chain. So on-chain just means once the information is stored on the blockchain, pretty much you cannot change it. But things that are happening off-chain, that cannot be captured by blockchain, and that's where you have to look for fraud. So for example, say I am Apple, okay, and then Irina ordered, she placed an order of 1 million iPhone from me. And then I said, well, good, let's record this transaction on blockchain. So then on the blockchain, I immediately recognize $1 million as revenue. However, I shouldn't do this because I have not shipped the products to Irina. Because by GAAP, I can only recognize revenue when I ship the products, right? But in this case, I directly keep a journal entry on the blockchain. So even though that journal entry on the blockchain cannot be manipulated later on, it doesn't mean that this transaction is legitimate, right? So then that means for auditors and accountants, it's becoming increasingly important for them to validate this off-chain activity, which is, in this case, me shipping the products to Irina. Okay, so these are the new challenges with the adoption of blockchain in the business world, right? It cannot prevent all fraud or cannot solve everything. Although in general, the quality of the data on-chain can be improved, but we still need to validate the legitimacy of the off-chain activities. Okay. So next I will talk about artificial intelligence. So first is, what is this technology, right? What is artificial intelligence, and why do we talk about it? So first, AI is nothing fancy. Again, AI is already in our daily lives. For example, product recommendations, when we shop on Amazon, when we watch videos on Netflix or YouTube, the recommendation of products or movies or TV shows are considered a type of AI. And when you use your phone, right, you can unlock the phone using your using facial recognition, and that's a type of AI. And now we see like a self-driving cars, that's a type of AI. And At home, if you use these virtual assistant like Alexa, Siri, Hey Google, these all belong to AI. So AI is already around us, but we have to think about how accountants can utilize it, right? And how the business corporations can utilize that for business measurement, something like that. So AI is already around us, and actually it's not a new term. The term of artificial intelligence was created more than 50 years ago. So why is it so popular nowadays? And we see it like very often. This is because now with advancement of computing power and storage, we just can deal with more data, right? And also there is more data for us to process, and we call these big data. And of course, we have advancements in the algorithms or the methodologies to process these data. So big data is characterized as 5 V's. So actually, I think that only the 3 V's matter the most, which is volume, variety, and velocity. So volume just means, there is a lot of data. You can't imagine like how many Google searches can be generated in a day, right? And that also says about the velocity of the data, which means the speed of data generation. And also we have different types of data. So in a relational database world, we mostly deal with textual data, right? For example, revenue data, cost of goods sold, so on and so forth. So these are all numeric. But for a company to generate more business insights, they also are interested in non-numeric data. For example, textual information, say comments or just comments from the customers, right? So for example, if I'm a restaurant owner, if I want to see how customers like our service, I can go on Yelp, right? Or other kind of, platforms and see what people are talking about us, right? Whether or not they like the service, do they leave a 5-star to us? But usually the comments are a lot to deal with. For example, if you go on Twitter and search Apple, you will see a lot of comments about Apple or comments about their products. So that is to say, if a business wants to, get some insights about, whether or not customers are liking our product and whether we should change some marketing strategy, we have to get useful information from these textual information, right? So that's one example of like utilizing a textual data, and we can talk more about that. And with AI, that is made easier to do. So since AI is a very broad term, right? So when we talk about AI, we have to narrow it down into different technologies. So I have 4 technologies listed here, and you just have to understand at a high level how each technology work. So one easy way to understand these technologies, to map each technology to a function of a human being. Okay, so first, machine learning. This kind of technology deals with pattern recognition. So you can think of pattern recognition as us recognizing someone on the road, right? This kind of pattern recognition is a main function of the machine learning. Okay, and then we, as human, we can speak, right? We can speak so many different languages. We understand what others are saying, and we can interpret. So the second technology, this natural language processing or generation, maps to this capability of speaking and understanding language. The third technology, computer vision, maps to our ability to see things, like things moving around. Like actually, the first example of me recognizing someone on the road also belongs to this ability to see, right? So computer vision maps to this ability. Now, lastly, we can move around, we can do things, right? That maps this last technology called robotic process automation, or just robotics, map to this function of moving around, right? You can think of these robots like working in assembly line, something like that. Okay, so these are just like common AI technologies. So here are some more details. So machine learning, as I said, it's a pattern recognition technology, right? So now we've seen applications of, you input pictures of dogs and cats, and then the machine learning can tell you, the label of that technique of that picture. And I will talk about how these apply to the business. So in terms of banking and finance, we've seen companies using machine learning to do fraud detection. So for example, actually not limited to bank and finance, actually just in general. So say in this process mining case study we just did, right? If you recall, the second activity is to review the credit history of a customer. Right. So in that process, the manager has to see, whether this customer is credible enough, whether this customer has a high risk of default. So this one is a pattern recognition task or a prediction task. So this type of task is very suitable for machine learning. So now there is applications where machine learning is adopted to predict whether a customer has high likelihood of default. Actually, a closer example to all of you is when you apply for a credit card, right? Remember, you have to put all this information and then you have to wait until the credit card provider gives you a feedback, right? So actually in the background, there's some kind of machine learning running around to predict whether you are, a suitable person to get a credit card, something like that. So this is machine learning. Actually, let me put here. And more accounting applications regarding machine learning can be, we talk about bad debt allowance, how likely is, what's the portion of the accounts receivable can we not collect? So this is also a prediction task that machine learning can handle. So machine learning can also be used for that. And then in terms of natural language processing, we see applications where this technology is used to process invoices, because on invoices, you have lots of textual data, like description of the product or amount of the product, so on and so forth. So this type of technology is able to extract those information and then enable the accountants to do a faster review or reconciliation. As I mentioned earlier, if you want to understand the sentiments of the customers' comments about your company, you can also use this natural language processing because at a high level, you can see if the customers are being positive or negative about your business or products. So that's the use of natural language processing. And then for the last, the robotic process automation, which is automation, it is mainly used to automate some repetitive tasks, for example, reconciliation, matching, so on and so forth. So there is always a debate that, okay, with all these technologies, are you guys going to be very difficult to get a job? Because some of the technologies can replace like an entry-level work. That is not your concern now, but like every one of us have to learn how to adapt, right? This may affect the accounting profession in the next 5 years, but not now. I think now we are still not there yet. So lastly, I want to talk about this type of AI technology called robotic process automation. So as I said, this kind of technology, you can map it to our function of doing things or moving around. So this type of technology, this RPA, in the accounting world, it's mainly referred to a type of software that you can install on your computer to automate some, repetitive and mundane task. So now you might ask, okay, how is that different from the software that I'm using, like Excel, like Canvas, something like that? So one feature about this robotic process automation is that this kind of automation is very easy to use. So unlike a relational database where you have to code your SQL queries, right? Or, or Python where you have to put codes. This kind of software is code free. It's like a drag and drop. It's like playing with a toy, something like that. It's very easy to use, relatively easy to use compared to other tools. So for business people, they like it because they don't have to learn how to code, right? So that's why this RPA is catching wind in the accounting field. And also RPA is just very suitable for the accounting and auditing type of work, because most of the work or many of the work that we do as accountants or auditors is the standardized or rule-based task, right? For example, reconciliation, matching the data, and identifying percentage changes. So all this type of work can, to some extent, be formalized and therefore be automated. So that's why in accounting and auditing, the firms are considering using RPA to assist human auditors or accountants, because as you will go into the workforce soon, you will see most of the work that you do at an entry level is very boring, very like mundane. You will feel that, oh, why did I get a degree from Rutgers and doing this kind of work? So now, accountants really want to have that kind of work taken away from them. So you see a lot of, people, they want to implement RPA in their accounting department. But what RPA cannot do is that as I said, RPA can only deal with, mundane and boring work, right? Such as reconciliation, matching. So that will leave you with more interesting work to do. So for example, you want to work on interesting things as identifying the risk of the company, assessing the level of bad debt allowance. So those tasks are more interesting, right? So then RPA can take away the boring part and leave you with the more interesting part. So that's the hope for RPA. And here are some business applications for RPA, and you can see, examples like purchase order processing, bank reconciliation. These are standardized or rule-based tasks. I forgot to mention one of its features, that is that RPA is able to mimic some human actions that you interact with computer. For example, let's say you go to Canvas, right? You would open a browser, and then you click the link to get into your Canvas, and then you input your password and username. So all these actions can be, mimicked by RPA. And that's how, at a high level, one of its features to automate. Interesting to you, right? Because it gives you some, state-of-the-art development in this area. And as I said, you just have to focus on my lecture and my slides to review for this chapter, right? Because we have some multiple choice questions at the final exam regarding these content. But if you focus on my lecture, that you should be fine.